Hello and welcome. You're watching Business Today Television. This is Market Today and I'm Sakshi Batra. Well, it's Friday today and for the week, the Nifty is already up by 1.2%. It is also poised for its fifth straight weekly advance if it rises in trend today. The bulls would hope that at least HDFC Bank will not spoil the mood and the party just like it did yesterday. Despite that, we did see that as of Thursday, both the benchmark indices, the Sensex and the Nifty, managed to close at record high levels. We do have a new intraday high level to refer to for the Nifty now of 24,401. That is the new high for the Nifty. The Sensex achieved a historic milestone, closing above 80,000 mark for the very first time on July 4th as well. And remember that the Nifty 50 is now in the process of completing this 5-week winning streak. It has already rallied 8% during this 5-week period already. Now, what we need to keep an eye out on is how the global market cues will shape up. The domestic cues in terms of business updates for various companies is coming in. And of course, all eyes are now slowly and gradually keeping an eye out on the upcoming earnings, which will be the next key trigger for the stock markets. Now, what are the overseas cues really suggesting to us? Remember, the US markets were shut last night, and this is owing to Independence Day holiday. And therefore, we do not have any US cues. Markets in Asia Pacific region, however, they exhibited a lackluster trend as of the early morning session. So, if we look at the Nikkei, for example, that's down by about 0.01%. We do not have the US cues, so it will be wrong to show the US cues because this is just the previous day's cues. So, Nikkei is just about 0.3% higher in trade. The Kospi is up by 1.3%, whereas the Hang Seng and the Shanghai, they are down in trade today. Now, let's also keep an eye out on how the Gift Nifty is indicating. It is actually flattish with a negative bias, so it's indicating a downward start for the Indian markets at around 24,377 odd. So, it's indicating a lower start for the Indian markets. Now, as far as the flows are concerned, remember the overseas investors, they have stayed net buyers for the Indian equities for the second consecutive day as on Thursday. We did see the foreign portfolio investors mopping stocks worth about 2575 odd crore rupees, while the domestic institutional investors, they stayed net sellers for the second straight session. They sold about 2375 odd crore rupees in yesterday's trading action. So, FIIs are changing the position. We'll have to see whether that momentum also stays on with us for the next week too. Now, let's keep an eye out on all the stocks that we have to keep an eye out on. So, first is HDFC Bank. Remember, the bank's deposits and the Q1 business update has actually come in weaker than expected. So, the deposits have seen a significant growth, reaching about 23.8 lakh crores, but are registering a 24.4% increase from 19.13 lakh crore. That's a year ago. But the figure was almost unchanged on a quarter-on-quarter basis. Now, excluding the merger's impact, the deposits have grown by about 16.5% over the past year, but this is below the estimates as well. When we talk about Raymond, the textiles and the fabric manufacturer has announced a significant restructuring move as its board of directors have approved the demerger of the real estate business into Raymond Realty. The shareholders of Raymond will receive one equity share of Raymond Realty for each equity share held in Raymond with no cash consideration involved. The other stock that I'm keeping an eye out on is Mahindra Lifespaces. The realty firm has said that the company has closed two significant deals cumulatively valued at 2,050 crores in the gross development value or the GDP. Now, as far as UCO Bank is concerned, again the public sector lender has reported robust growth in its Q1 business update, with total business rising 11.5% year on year or to about 4.6 lakh crore rupees. Now, as far as PNB is concerned, here the global deposits for the bank have increased by 8.5% year on year, and they're up 2.8% sequentially as well. Domestic deposits are up 8.1% to 13.7 lakh crores, whereas global advances are up by 12.7%. Now, apart from this, Poonawalla FinCorp, we'll keep an eye out on that one too. The non-banking lender has reported strong performance in the first quarter of FY25. The company has reported a substantial 52% year-on-year increase in the assets under management, reaching approximately 26,970 odd crores. IDBI Bank, the bank's total deposits have stood at 2.7 lakh crores in the first quarter of the fiscal year 2025, marking a notable increase of 13.3% on a year-on-year basis. So those are some of the stocks that we'll keep a keen eye out on. Let's also start to welcome our guests on board. We already have Mr. Kiran Jani now joining in on this very special broadcast. And Mr. Kiran Jani, as you all know and have been seeing, he's from Jainam Broking. Warm welcome to you, sir. Thank you so much for taking the time out. First up, a sense on the market setup that you have both for the Nifty and the Nifty Midcap and the Nifty Banking Index. And what do you expect for today, especially for the Nifty Bank, because HDFC Bank has now come out with a lower than expected business update. Will it be the second day in a row that HDFC Bank will continue to exert pressure?
Very good morning, everyone. So overall, let's discuss first about the index setup. This is the second time the Bank Nifty has created a negative candlesticks pattern on daily time frame. Last week also, Bank Nifty has created such pattern, but it violated with gap up opening. However, yesterday also we are seeing another bearish pattern is forming on. Bearish divergence already exists on daily chart price, but as of now, we are not receiving any kind of information. Now, as far as HDFC news, it may help Bank Nifty to confirm this bearish pattern. So we remain cautious on the Bank Nifty. If Bank Nifty is breaking below 52,800 or 52,700 today, then later part of today we can expect some profit booking on Bank Nifty, and lower side we are expecting 52,000 to be touched. Whoever is holding the long side on Bank Nifty or even HDFC Bank, keep very strict stop loss on lower side, particularly on Bank Nifty. 52,800 would be the strict stop loss. Coming to the Nifty, Nifty is also forming a bearish pattern, another shooting star, or we can say a bearish doji candlesticks pattern on daily chart price. Another thing I just wanted to highlight, the Nifty momentum indicator trading is around 72. Previously, we are seeing 72, 75 was the cluster resistance, and once if it crossed, it also goes to the 84 level. So we are at make or break level. So be very cautious. I am not recommending to take short position, but at least whoever holding the long position, they can advisable to keep very strict stop loss of 24,000. If 24,000 is taken out, then we can expect some previous profit booking also. As far as Nifty Midcap Index, it is into the bull zone. It has given a breakout from recent consolidation pattern also. So as of now, Nifty Midcap is trading at 56,600. So it has a very good support of 56,000. So unless and until 56,000 is not taken out, we are bullish on Midcap. Buy on dip would be the strategy. However, on Nifty, Bank Nifty is also buy on dips is the strategy, but keep very strict stop loss as we suggested. Let me revise again: 52,800 for the Nifty and 23,000 for the 52,800 for the Bank Nifty and 24,000 for the Nifty.
Okay, got that. I think we already have the pre-open rates with us. Let me just quickly check that on the Nifty. It's opening at about a 90-point lower tick is what it is showing, but this could settle down. 24,234 right now, a 66 point of a down tick. So it's very, very volatile in the initial trade. But let's see how the markets really open in. Let's also look at HDFC Bank because that will be the most important counter that we will be checking as to how it opens after the lower business update that it has given us, and therefore the Nifty Bank as well will be very, very important to track. Let's pull up the stock of HDFC Bank to see how that has reacted in the pre-opening levels. And of course, we will be keeping an eye out on the entire banking space as to how that reacts, be it the ICICI Bank counter, the Axis Bank counter, Kotak Mahindra Bank, all of that as well. 2% downtick for HDFC Bank at 1690 odd levels, a 4% downtick for ICICI Bank. Let's also look at Axis, 2.5% lower, 1250. And let's also look at Kotak Mahindra Bank, how that one is also opening. So the big heavyweight counters in the initial trade of pre-open is showing a downward tick. Now, there is a further slippage within the Nifty, 130 points lower within the pre-opening rates. It's very, very volatile in the initial minutes, 24,170. Let's also pull up Reliance Industries to see how that one is reacting, because the onus, if not on banking, will again be on the heavyweight counters to check the weakness in the markets as well. And of course, the IT names like Infosys, that's still lower by about 1.5%. TCS is opening about 0.5% lower. Let's also look at Reliance Industries, and we are hoping that this will also settle down as well. Quickly, Kiranji, two stocks that you will be keeping an eye out on for today.
From different sectors. One is from the pharma sector, Syngene. If you look at the daily chart price, the Syngene is giving a breakout from its recent consolidation pattern. Secondly, it has a resistance of 200 days moving average. Yesterday, we have seen that prices has closed above its 200 days moving average with volume and average is also the volume was also above average 20 days volume. So it's clearly indicating that Syngene can give a very good upside rally. So the closing price somewhere around 725. We can go long on Syngene with the target of 745 with the stop loss of 714. Another stock which we are liking is the Sun TV. On media sector, you can see there is a long-term consolidation pattern breakout is been playing out. Sun TV has given a breakout from flag pattern and it is consolidating from there only. Yesterday, we have seen some profit booking, or we can say retesting of its previous breakout. So closing is somewhere around 780. We would like to go long for the target of 850 with the stop loss of 764. So Syngene and Sun TV both are our preferred pick.
Okay, got that. Chaliye, we'll also welcome our other guest on board. Mayuresh Joshi joins in, Head of Equity Research at William O'Neill India is now with us. Warm welcome to you, Mayuresh, and thank you so much for taking the time out. Before I understand a bit more detail as to how are you looking at the entire market setup, HDFC Bank is something that I wanted to first start off with by understanding your view. The way it shot up and now it's again come down on the back of business update and the weakness on that front or lower than expected numbers that have come in. How are you really looking at HDFC Bank? No sustainable move, it only went up for one day. How should really one look at HDFC Bank counter?
Morning, Sakshi. Morning, Kiran. I think the move has preceded all these updates. So I think there has been a good move in the last few months, almost 20-25% for the bank as a whole. If you're probably looking at updates, we've always maintained a stance that numbers are only going to improve gradually. You cannot expect an overnight transformation or a quarter or two transformation in terms of core numbers. Obviously, large private sector banks have seen issues as far as deposit mobilization is concerned. And therefore, at core dynamics in terms of the HDFC book, how do they have the overall NIM and spread path laid out is something to be seen. The cross-selling opportunities for HDFC Bank as far as HDFC customers are concerned. And therefore, synergies both in terms of revenues and costs will take some time. But as that happens and as the base gets created over the next few quarters, my own sense is that the next few years earnings will be far more steady. As rate cuts start happening, NIM should also start reverting back to mean on a consolidated basis, standalone basis for the bank, that the NIM should revert to mean as well. So you have to give it some time. Obviously, the stock has moved significantly in the last few months. But if it declines and it creates a good base at lower levels, as we see it at Funds with India, I think investors can probably look at that. But I think it will go through a phase of consolidation, in my opinion, till numbers show improvement, and numbers will start showing some element of respite by the second half of this election.
Okay. And overall, Mayuresh, 5 straight weeks of gains continuing for the street. What next? Are you comfortable at these record high moves? Do you anticipate that now there will be some kind of a pause, some consolidation which is extremely needed at this point in time so that the upward rally can sustain from here on? How are you really approaching the markets right now? Are you fully invested? Are you pulling out some cash? And what would you advise viewers as retail investors?
We are being very, very selective, such at this juncture. You're absolutely right. I think certain pockets in the market, there is exaggeration, both in terms of price action as well as valuations. And therefore, being selective in these markets is paramount. The other element in terms of whether pullbacks are needed, oh, absolutely yes. Because if the market goes in the way it is, and we all know that this is a liquidity-driven rally that you've seen from the June 4th lows. And you very well know that what happens if some event or the other happens and there is a sudden pullback. Unfortunately, I think for investors who are waiting for a structural or a deep dip, the market has not really given that in the last 2 to 3 years. I think the maximum the Nifty has dipped is 5 to 6%, and it's closely pulled back again. But yes, to answer your question, wait for pullbacks, be a little bit more patient. If the pullbacks do come through in the next few weeks as a run up to the budget, post the budget, after the quarter numbers in some pockets, there will be some element of entry points that investors can look at. But yeah, I think you shouldn't be going all out at this juncture. Be selective. That's what we are doing at March.
Okay, but where is value to be had in this current market setup, Mahesh? Where are you really looking for fresh ideas which are now getting extremely difficult to scout because everything has moved up? Valuations are increasingly getting uncomfortable. So where exactly are you looking for value?
I think certain pockets, as I mentioned last time as well, looking at the budget, some sub-segments like water and waste management are going to be a key focus area for the government. You're also going to see a lot of action being done in terms of infrastructure, manufacture-related capex. And therefore, these themes are going to continue in terms of the structural capex mode that the government is in. And therefore, these themes would continue. The other element in terms of certain pockets like auto ancillaries to a certain extent and real estate ancillaries to a certain extent selectively can do well. So our take is that domestic cyclicals should continue doing well. But again, you have to be very, very selective out here.
Yeah. Okay. Any two stock ideas, Mayuresh, that you'd like to share with our viewers?
So I think, as I said, we are being very, very selective. So no, not much of a change from last week. Within auto ancillaries, Varroc engineering is something that we'll still continue to prefer. Our own take is that they're sitting on a very strong order book. They've won orders to the tune of 8,500 crores. 45% of the orders are from the electrical mobility part. Now, surprisingly, till FY24, electrical mobility and platforms contributed only 5%. But incremental order wins coming from this segment with better accretive margins will mean that as they execute over the next few quarters, the margin improvement is going to be obvious. The other element in terms of adding more clients as far as their electrical mobility business is concerned is something to be watched out for. The synergies and the merger is also expected to take place, which will reduce the syndicated debt to a large extent. And therefore, I think it's appropriately placed in terms of the entire auto transformation that we're probably seeing from internal combustion engines to electric mobility platforms. Their mix is also very decent in terms of two-wheelers, passenger vehicles, as well as CVs. And even within two-wheelers, I think non-Bajaj is almost 45-50% odd. Decent balance sheet, which gives it a good propellant for earnings growth. The second element is obviously Pharma. Kiran also mentioned that our take is Pharma selectively should also do well. Morpen Labs is something that we continue liking from a momentum perspective. Their devices market and their market leadership in both the gluco market and the BP monitors is very well known. It's a good brand by the name of Dr. Morpen. It's what we are aware of. The best part is once the product sale is done, the strip sales is something that contributes even more. Because once you take the product to do your regular testing, you need strips to probably be bought time and again. And this is something which gives them incremental revenue. So this is going to be a good cash flow element going forward as well. And the API business, 6 large APIs that they've got, more expected to be introduced, will hold them in good stead as far as top line is concerned, expecting decent margins and bottom line. So I think these two stocks are something that continue liking it.
Okay, Varroc Engineering and Morpen Labs will continue to keep an eye out on. Kiran, I think mostly the markets pre-opening rates have settled 24,213 on the Nifty. Right now, the Nifty bank also flattish, I think, at this point in time. In fact, there's a 1% downtick. Yes, 52,560, a 543 point of a downtick. So it could mean that probably HDFC Bank will continue to drag the sentiment on the banking space in the initial trade at least. How would you really look at HDFC Bank from today's perspective, Kiran?
So overall, if we look at the daily price chart of HDFC Bank, it has given a breakout definitely. But after that breakout, we have seen that the big gap up was there. And yesterday, the entire gap up was filled and now stock price again back to his previous breakout level. So as far as considering the daily chart price, the stock price has a big accumulation zone from 1680 to 1700. The yesterday closing price somewhere around 1727. So any dips towards 1680 would be the buy opportunity I preferred. So let's wait for a day. Let's market to settle, or I can say HDFC to settle somewhere around 1680, 1670. If those prices hold by today and tomorrow, then there are very good chances stock price can reverse from this level also. So we are waiting for the dip somewhere around 1680, and then we can prefer to go long on HDFC.
Okay. The other stock that I wanted both of your take is Raymond. That's going to be important for us to really watch out today, because the company has now announced significant restructuring move, as its board of directors have now approved the demerger of the real estate business into Raymond Realty now. Shareholders are likely to receive one share of Realty, for one share held of Raymond as well. That's why we are seeing, I think, an uptick that could be about 3.5% for Raymond shares today at 3,040. First to you, Myresh, and then we'll take a technical view from Kiran also on Raymond's.
No, so actually it was expected. If you probably look at the business constructs, the real estate pre-sales velocity has been very reasonable for Raymond. All the new launches, including the one in Pharma, has received quite a good response. And therefore, I think the reality part of the business, which was part of the Raymond business, being demerged, actually makes sense. And in the real estate cycle, even more. Obviously, the core business that will now continue in terms of their branded business, the demerger of the FMCG business that has happened a few quarters back, has made the company cash rich at this juncture. And therefore, I think the core business verticals that they're still operating out of, and even the auto ancillary part that they probably do, they have leadership position in both the segments that they operate out of out there. So I think it's a good move. The stock is reacting in terms of the merger issue announcements, which should be positively accretive to existing shareholders.
Okay, let's take Kiran's view as well. Kiran, how would you really assess if it opens about 3.5%? Is this a momentum that you would chase for today?
So overall textile industry is going on, and we are seeing that many textile player is giving a breakout also. So as far as considering Raymond daily price chart, stock price is forming a flat pattern, and today it's looking 3.5% opening in pre-opening. There are chances that this flat pattern can give a breakout. So definitely we can go long. It is a conditional buy. If stock price is sustainable 3,000 level, then one can go long. The stock price is very high because the stop loss is very at lower level, somewhere around 29.50, 29.40. If those levels hold, then we can expect some good amount of upside should come in Raymond somewhere around 3,200 to 3,300. So definitely above 3,000, we can go long on Bata with the stop loss of 29.50.
Okay, got that. Myresh, within the entire banking space beyond HDFC Bank also, we are seeing a slew of business updates that's coming in, even for the PSU banking sphere. How are you looking at the updates on that front? And ahead of the earnings, does it make sense to start looking at afresh into some of these PSU names within the banking area?
Possibility. And again, I think there will be some stickiness again. I think the street realizes that in terms of names, stickiness in terms of the overall business numbers per se, in terms of its expectations. So the Bank of Maharashtra, sorry, and State Bank is something that has a clear disclaimer we continue holding in our global portfolios.
Okay. Markets have opened, and we are seeing a weak opening today, viewers. About 60 point of a downtick, 24,240 right now for the Nifty. The Nifty Bank has opened about 340 points lower at 52,778 right now. There's a 0.6% of a weakness. Talking about the sectors that are in the red, it's of course the banking names, the financial services also down in the red. Consumer durables are losing some ground. Let's look at some of the key stocks that are dragging the indices. HDFC Bank, let's pull up that stock first to see how that one has opened. 1677, up 2.9% downtick on HDFC Bank for today. We also have stocks like M&M, Titan, Tata Steel. These are the ones that are dragging on the Nifty early in the opening action. Let's also look at how Reliance Industries has reacted, whether that is supporting the market at this lower move that we are looking at. within the space. Reliance is opening about 0.2-0.3% higher, 3116. So at least some support coming in on that front. But the banking counters, even beyond HDFC Bank, let's pull up ICICI, let's pull up Axis, Kotak Mahindra Bank to see whether the entire private banking space has slipped post that sharp downtick on HDFC Bank. Half odd percent uptick for ICICI Bank, so it's holding its ground, 1239 right now. Kotak Mahindra Bank flattish with a positive bias at this point in time. Axis also, let's pull up to see how that has reacted, 0.25% of an uptick. So largely the dent remains on HDFC Bank for now. Bajaj Auto is opening higher by almost 1%, and that's the top mover on the Nifty right now. Hindalco, Cipla, Infosys, Wipro, JSW Steel, these remain as the top buzzers. It's the PSU banking space, viewers, that is now taking limelight. Half odd percent uptick for the PSU banking index. Within this, it is Punjab National Bank that's opening higher and is leading the gains after that business update. Even in the F&O space, it's the top mover, 1.5% higher. Within the F&O space, you also have stocks like Glenmark Pharma that's been continuously moving up, Cipla, oil and gas, natural gas, Petronet LNG, and Astral as some of the other stocks that are moving up. Let's also pull up some pharma stocks. Remember, both our guests are now turning bullish on pharma. Syngene from Kiran and Morpin Labs from Mayuresh is what we've got as investing ideas. Well, pharma index is now taking it away, about half odd percent increase. Remember, yesterday also this was the space that was taking it away. Cipla is now up and about 1.3% higher, followed by Glenmark, Natco, Divi's Laboratories, Laurus Labs, Zydus Life. All the stocks within the pharma space are now up into the green. Small caps are also doing well, about 0.4% of an uptick can be seen on this one. Then you also have the media and the oil and gas index. It's Raymond. Let's look at that stock. That's now 5% higher at 3,080. The defense stocks, let's look at those which were the top performers of yesterday. Cochin Shipyard, there is no let up, a 5% uptake even in the trade today. Let's pull up even Mazagon Dock, the stock that hit 20% uptick in trade yesterday, and GRSE, which was up 9% within the shipping space. Another 2% uptick for Mazagon Dock. GRSE, let's see if that one is also on the move and on the prowl for the fourth straight session. I think yes, 1.9% higher in trade is how it is opening. Within the railway pack, it's Ircon International that's buzzing now, about 3.5% higher in trade. RITES, which was moving yesterday, is also up by about 1%. So we're looking at the railways pack and the defense pack also that continues. Remember, Hotco was in action yesterday. Again, there is about a 1.5% uptick in trade today. Beyond this, NBCC, you have UCO Bank, First Source Solutions within the small cap arena, RR Cabell and CAT also moving up and about. A lot of action that is unfolding in front of us. Let's get Kiran to comment on the opening levels and where are you keeping your focus now within this opening level, Kiran?
So looking at opening, as we discussed in the morning also, that market can open with a gap down. And as far as daily price or daily chart price, or even let's discuss about the open interest. The open interest suggests 24,200 put writers is holding a highest amount of open interest as of now, and market is just dragging below 24,200. So if by 10 o'clock market sustained below 24,200, then we can expect some profit booking should come in later part of today also. So whoever holding long position, keep very strict stop loss, as we discussed about 24,000 for the medium term, and for the intraday perspective 24,150 would be the stop loss. If prices break those levels, we can expect journey towards 24,000 on Nifty. Coming to the Bank Nifty has a resistance now at 52,800. If market crosses about 52,800, then we can expect some recovery. The good thing on Bank Nifty is that Bank Nifty open low is remain same, and generally this is a traditional way to look at the market. If initial minutes market is holding its open and low which is same also, then we can expect some recovery on same day. So if market is holding 52,500, 52,400 level, then we can expect journey towards 52,800. And once market crosses 52,800, then we can see some good amount of recovery also. So as of now, market is in very tight zone. We should respect support and resistance in Nifty. 24,150 would be the support for the intraday. and higher side 24,250. So this is the 100-point range. Buy on dips and sell on rise would be the strategy. Similar way on Bank Nifty, 52,500 is the support. You can buy somewhere around that with same
Right.
stop. And on higher side, 52,800 would be the resistance.
Right. HDFC Bank, 3.3% now lower at 1670. About 25 lakh shares have exchanged hands, worth about 429 crores. Has exchanged hands at this point in time, and therefore you can see a dip now coming in. Mayuresh ji, to you, HDFC Bank at 1670. Would you say for all those long-term investors looking at HDFC Bank, accumulating them, is this a good level to start adding?
Yes, I think as I said, pullbacks as it creates a good base at lower levels as we see it at markets with India, because RS rating, EPS rating, judicial ruling is all fine. And it will take time for synergies to build up. So after the huge run-up that you're probably seeing, it is in a base building mode. And I think it's a good sign for the bank as well. If it consolidates and there is a good base that gets created over the next few weeks, that will give investors a good opportunity to get in.
Okay, got that. Well, there is a big update coming in from the United Kingdom for UK elections. Rishi Sunak has said that the Labour Party has won the election, and those are statements coming in. He says that I will continue to serve as a member of Parliament on this difficult night. I thank the people of Richmond for continued support, is what Mr. Rishi Sunak has said, as the first statements are coming in, those election results that are coming in, and the statements from Rishi Sunak. We'll keep an eye out on how the European markets also react to that, and the United Kingdom also. But we'll keep an eye out on those global developments. 3.4% down. It's slipping away now below 1670 for HDFC Bank, 3.5% lower in trade right now. But there is no let up in the defense names. Cochin Shipyard up 5% higher. Kiran, would you continue to look at the defense moves?
So defense rally has been going very fast, very far and very fast. So as of now, at current market price, we are not recommending to go long. Whoever is holding this particular stock price or any stock, they can hold this particular stock. We are not recommending anything at current market price.
Okay. Mayuresh ji, the other space, railways, again there is no let up. RVNL, Ircon International, rights, all of them are buzz, 4-5% higher in trade. How does one approach these stocks right ahead of the budget now, which will of course have some announcements coming in within the railway space? Should one be at least, looking at a tactical positional move if somebody has it already for those, and for those who may be looking at a momentum play?
Those who have it can hold on. Obviously, I think there is a risk in terms of valuations being overblown at this juncture. But I think the capex, as you pointed out in the budget, will clearly point out to more funds being allocated to all aspects of railways, railway infrastructure, the security system, Kavach, as we know it, signaling systems, platforms, upgradation of railway infrastructure. So I think there is going to be incremental capex that goes in, and a significant one as far as the railways are concerned, which means more orders flowing this way. Wagon makers, metro coach makers, as an example, as more and more metro services start getting deployed across tier 2, tier 3 cities. So there is incremental tailwinds for the entire sector as a whole on all aspects, more orders, reasonably sized orders, good margin orders, executing well. And therefore, I think valuations aside, I think the tailwinds are playing in along with liquidity. Again, I think being very selective here, Text-back Oriel is something that have continued to like. So any pullback on that counter, if it creates a good base at lower levels, is something to look out for. Others, I will need to wait for significant pullbacks because valuations are through the roof at this time.
Okay, got that. Another space, pharma space is something that let's discuss with you, Mayuresh. Glenmark Pharma is taking it away today, about 2% higher. Even in the Nifty, it's Cipla, Divi's Laboratories that are surging yet again. What is your overall sense within the pharma pack, and which is the area? You did talk about Morpin Labs, so should one stick with the healthcare pack, diagnostic spaces? Are those better off than the frontline pharma counters at this point in time?
So Sakshi, again, I think two things here. Within the pharma space, which are the companies who are doing the branded generics part or doing the specialty FTF filings? Those companies are going to make a huge differential over the next few years. Because even if you look at pharma as an index or certain stocks, there was under ownership a year back. But I think the weightage has changed for funds in the last couple of quarters. So I think the ownership has significantly increased for the sector as a whole. Now, companies are getting into specialty products as well as branded generics, where pricing should remain in favor of these companies. Normal products will probably still see huge amount of pricing issues. The third element, obviously, is the kind of pipeline that you've probably got. So, if you've got a pipeline which can be monetized over the next few quarters, which is your phase two, phase three, that can probably get into the market over the next few quarters. That gives you revenue visibility. And therefore, I think a few of the larger names shall continue doing well. We continue holding stocks like a Sun Pharma, Dr. Reddy's in our global portfolios.
Yeah.
Within the mid cap names, certain stocks which can probably cater to these aspects, something like a Natco Pharma as an example, which we continue holding, is something that can do well because of all the aspects that I just mentioned.
Okay, got that. Anything technically that you'll be looking at, Kiran, within the pharma space for today? Top one or two ideas?
Yes, so on pharma, yesterday we have seen some very good move on Lupin. On frontliner pharma, like Sun Pharma is also giving a fresh breakout. The stock price is trading in on days high as of now. If you check the daily price chart, it has a very steep resistance somewhere around 1550. Yesterday, stock price closed above that. Momentum indicators again getting back into the bullish zone also. So Sun Pharma would be the preferred pick at this juncture. Can go long at current market price, keep strict stop loss below 1500. And looking at overall price chart, if you are okay to give 3 to 4 months, then during this time we can expect again 1650, 1640 kind of a price target.
Okay, got that. Let's also discuss the IT pack with you, Mayuresh, to really understand where are you keeping your focus. Yesterday, again, it was the mid-cap space that was outperforming stocks like Coforge, again coming into limelight. Today, again, First Source Solutions is again a buzz from last few trading sessions. How are you really addressing the entire IT pack? Because we're just about 7 days away from the earnings now that will start to kick in. Your own sense?
So, Sakshi, I think mid-cap IT has continued doing well. And again, if you bifurcate mid-cap and the large-cap IT, mid-cap IT has probably done exceedingly well because of order flows coming through. And that order flows continue for that 5 to 10 million bracket. Margins, again, in expectations of wage adjustments, outsourcing costs having increased, and now look to have stabilized. And therefore, even that aspect probably looks decent. The only issue again is a lot of stocks have moved up. So I have to be very, very selective here. The PE R&D stocks like a KPIT, Tata LXI have obviously done well. KPIT in particular. Persistent, Coforge is something that have exceedingly done well, and management seem to be very, very optimistic. So anybody holding these stocks should continue holding. For large cap IT, again, I think the stickiness in terms of BFSI, retail manufacturing might still be a drag. What we probably saw in terms of the commentary that has come through, I think that itself would indicate that this quarter again might be sticky. So I will not put my neck out. I will wait out for fewer numbers. My own sense is that a genuine recovery will only come for large cap IT in the second half of this.
Okay. Kiran, to you, IT stocks, do they find favor with you, technically speaking? And if at all, then which is the stock that you will keep an eye out on today?
So first of all, I would like to comment on Nifty IT index. If you look at the Nifty IT index, it has taken a support somewhere around 3200, 32,000, and from 32,000, currently it is trading at 37,700. Now you look at the overall daily chart of Nifty IT, it has given a breakout from the ascending triangle pattern. Previously, we the rally fizzled out somewhere around 37,700, 38,200. So we are approaching towards the resistance. But looking at the overall performance, the previous rally led by the only large cap and the mid cap IT was not running. And before that, only mid cap was running and large cap was not running. But this time, mid cap and large cap, both IT stocks are moving on. As Mayuresh sir mentioned about the Coforge and Persistent or Emphasis, those are from the medium mid-cap IT stocks. But you look at the Infosys, you look at the Wipro, you look at the TCS, they are also participating in this rally. So there are very good chances and very high hope on the Fed also that later part of this year, they probably can interest rate. So these are the reason led the IT. So our preferred pick is on the large cap IT. Wipro is our preferred pick. Any dips towards 520 would be the great buy. Very strict stop loss of 480.
Okay, let's look at the broader universe. There is a lot of action right there. Landmark Property is yet again at a 20% circuit already. You have Shilpa Medicare that's buzzing very, very strongly, 13.5% higher for this one. You have, after a long haul, Aluvilia Contracts that's up by about 9 odd percent. Kaya Limited has been continuously a buzz from the time there was a deal with Marico. So that stock is again another 7% higher, 8.5% higher now in trade. You also have stocks like Cochin Shipyard, which we have already addressed. Very sharp move now, 7.5% higher in trade for this one. Everest Kanto is up by 6%. You also have Bama Lorry, something that Mayuresh has discussed with us in our previous shows. That's also a buzz in action. Let's discuss with you Bama Lorry, Mayuresh ji. Your own sense now for all those viewers who have held on to the stock from your recommendation on. What should one do?
Continue holding because I think the aspects that they are into, logistics, travel, they are expanding their capacities at JNPT. They've got a very decent dividend yield. So they are into the right aspects as far as the government action mode will continue as far as CapEx are concerned, both in terms of logistic infrastructure and otherwise. So right spaces, good cash flows and decent dividend yield, I think, good enough figures for investors to hold on.
Okay, a pharma day, ladies and gentlemen. It's a pharma sector is a buzz with all the action stocks like Glenmark, which is now buzzing about 2.6% higher. You have Divi's that's up in trade about 1.5%. Cipla is up 1.5% odd in trade. You also have Dr. Reddy's now pulling up about 0.4% higher. Zydus Life Sciences is also buzzing in trade. We discussed Shilpa Medicare just now. That's a buzz with action, 13.5%. Oro Pharma, Healthcare Global, Shalby Hotels. You also have Markson's Pharma that's up and about in trade. The entire space seems to be a buzz with action. Kiranji, your top trades within the pharma pack today.
So Pharma, we discussed Engine, we discussed Sun Pharma also. Now, out of apart from these stocks, Oro Pharma one can look. Lupin already moved yesterday.
Yes.
Oro is also approaching towards its previous all-time high, or we can see resistance. If you look at the Oro Pharma chart, it is also forming a cup and handle pattern, and today's move is confirming the breakout also. So Oro Pharma can be the good pick at current market price. 1260 is the trading price as of now. You keep a very strict stop loss of 1240, 1230 as safer side, and on higher side, if this level is hold, then there are very good chances we can see price target of 1320, 1315 upcoming time.
Okay, got that. So that's the pharma trade for you. Let's again look at Raymond. It was up 5%. Now it's about 3% higher at 3029. Mayuresh, on Raymond, does anything change after the announcement that has come in? And how should investors view this? Because there's been a one-way rally on this stock as well in the recent past. And like you said, it was already expected. But does it change for any fresh investor looking at an opportunity on Raymond now?
Not really. So I think the dynamics don't change. And to that extent, I think the merger ratio is in favor, but I think that's got into the price. So now largely, I think it's going to go back to business as usual, how they deliver on numbers, so on and so forth. But the move has been too sharp. Existing investors can hold on. They should continue to it.
Right. Apart from this, of course, the Nifty is still about 0.5% lower and is below that 24,200 mark, viewers. But a lot of buzz that's happening within the sectors. FMCG has started to pull up about 0.3% higher in trade. So Mayuresh wanted to understand with you. We've been discussing the rural theme with you. Now, of course, we did see two-wheeler space moving a buzz. We did talk about the agri-related stocks as well. Now the FMCG majors have started to move again. Stocks like Britannia, for example, they are coming back in action. How are you looking at the FMCG space particularly? And, should one really keep an eye out on here or ignore this space completely? Because we are seeing a lot of momentum in the other spaces.
The question here, Sakshi, is largely, is volume growth going to come back quite significantly? And it's not, unfortunately. So I think this quarter also, the volumes are going to remain tepid. You've gone through a periodicity of pain as far as rural consumption is concerned. The June month has also unfortunately seen rain deficit of 20% odd. So as the rain progresses in this quarter, as there is a decent amount of crop output, and as those realizations start coming through in the second half, specifically in quarter 3, as the output reaches the market, Q3 onwards, I think there will be some incremental change as far as volumes are concerned. Now, the street is banking on or analysts are banking on strong recovery coming through from this quarter or the next quarter itself, that's just not going to happen. You cannot expect sudden change happening in terms of discretionary consumption patterns. When inflation was so high, there was expectations in terms of more pain as far as rural spending is concerned. And therefore, it's going to be very, very gradual. It's not that the index has not done well. The index has done phenomenally well. A lot of stocks have moved significantly higher as far as the FMCG market is concerned. But for FMCG players, three things are very important. One, how the rural construct probably moves around, because almost 55-60% of their volumes from the rural market. Second, the volume plus value trends. If one of these variables does not move in their favor, there is no operating leverage. In three, a lot of stocks valuations are not cheap at all. So I think being a little bit on the sidelines as far as FMCG is concerned, I only expect a genuine recovery like the IT sector in the second.
Okay, got that. You know, within the broader space, what caught my attention is BEML. That's again on the move, 6% higher right now. Kiranji would request you to look at the stock and tell us what's next for BEML now.
So looking at BEML chart, the stock price has formed inverted head and shoulder pattern, and the neckline somewhere around 4800. Sorry. So that breakout has been confirmed now. Momentum indicator is also in bullish zone, so one can go long on BEML. It would be the very high risky call. Keep stop somewhere around 4500, considering this chart pattern. So until 4500 is not taken out, we can expect a price target of 5100 to 5200. The risk reward ratio is 1:2 only, but considering the pattern, you can go long. It's been a very high risk call.
Okay, got that. Mayurish, we'll also discuss the cement space with you. Again, some action coming back. Mangalam Global is now up 8%. Burnpur has been consistently moving. It's a small ticket counter. Deccan Cements is up 2% higher in trade again. You know, after the recent mergers, acquisitions, the kind of news flow that has been generating, how should one afresh approach this space? Large caps versus mid caps. Where do you think will, you know, greater possibility of making profits will be?
So large caps valuations are richer, but the expectation again, Sakshi, here is that because of their nationwide presence, the acquisitions that these companies are doing and the calibrated way in which they're increasing their capacities, that will create a huge amount of impact as far as it is a geographical presence is concerned. The second element is, again, as I mentioned a couple of weeks back, typically I think capacity is between 2-3 million tons to around 7-8 million tons. A lot of these players will find it difficult to expand meaningfully and compete with the larger players as far as pricing is concerned, distribution is concerned, clientele is concerned. And therefore, consolidation, as you're witnessing right now, might very well continue. Now, the hope here is that smaller companies might get superlative valuations as far as the numbers are concerned. But the recent acquisitions show that they are nowhere close to that. So they're getting either close to replacement values or a tad bit to a premium to that. Having said that, even if input costs go higher, the expectations of demand actually increasing over the next few quarters might actually outstrip supply because of government capex, so on and so forth. And therefore, pricing should remain in their favor even if the input cost goes higher. There will be a pass-through without substantial impact on the EBITDA. And therefore, cement as a subsector within the entire structural themes should continue doing well. So out of the names that we own in our global portfolios, UltraTech is something that we continue holding.
Okay.
JKC is something that we continue holding as a player.
Okay, got that. Let's keep an attention on the Nifty Bank, viewers. It's now slipping away. There is a 1.3% downtick on this one. In fact, from the day's high point, it's already moved down 700 points almost, 52,400 on the Nifty Bank. And of course, no surprises, the top drag on the Nifty Bank continues to be HDFC Bank. That's now down by 3.5%. Bandhan Bank 2% down, ICICI, IndusInd, Kotak, Federal, AU Small, Axis, all of these stocks are down and out right now. Let's look at, let's ask Kiranji to look at Nifty Bank and tell us what's next for Nifty Bank right now and what should be the trade that one should take.
So looking at Bank Nifty, as we discussed, that 52,500 would be the very good support. The Bank Nifty is trading below that. I'm discussing about the spot level. Now we can see the next level which we are looking at, that is 52,200. So I believe that looking at intraday chart, stock price indices, momentum indicator is in the extreme oversold territory. So we can expect some bounce towards 52,600 to 52,800. So for intraday purpose, you can go long in between 52,200 to 52,400. Keep strict stop loss below 52,400 and for the target of 52,800. So we can expect some rally or recovery from current level. You can go long.
Can go long. Okay, got that. Let's again look at one more space, Mayuresh, with you. We haven't discussed the auto space at large. Let's discuss that. The sales came in, and of course, the FADA information is also as far as June. CV sales were concerned, they are down 5% year on year. Two-wheeler sales, however, were up 4.5% odd. And looking at the tractor sales, the developments on that front too. How are you looking at the frontline OEMs versus the auto ancillaries that have been in the fastest lane, stocks within the bearing makers, stocks like even today, Kalyani Ford, Setco Automotive, Menon Bearings, they're all flying away. So what should one really do? Frontline OEMs or auto ancillaries, the best way to go about?
As I said, auto ancillaries selectively look good because I think that is where they will enjoy the benefits, both in terms of OEMs increasing their production capacities, as well as the replacement market where pricing is holding up for them. And therefore, I think a mix of both of them will keep them in good stead. To add to that, I think the transition that most of these players are doing towards the electrical mobility in a calibrated manner will ensure that they enjoy the benefits without having too much of leverage on their balance sheet. So auto ancillary has a space where EPS, RS ratings, institution holding are improving, which matches most of our parameters as far as CanSlim is concerned, is something that we remain constructive upon. For large OEMs, again, I think the demand factors remain strong. The order book remain very, very robust. They are improving their supply chain capacities. You saw that from M&M's investor presentation day, from Tata Motors investor presentation day. And all of them, some triggers with them as well. Apart from the PV part, M&M also has the tractor part of the business, which should recover well. Tata Motors, where the cash flows come from JLR, launches expected. Have been curbs as far as the European Union is concerned on Chinese EV makers as well, which creates that element of support for the European EV industry as well. And therefore, there are a lot of triggers at place for the original OEM players. Therefore, anybody holding these stocks, whether it's the frontline leadership stocks in TVs or two-wheelers, should continue.
Okay, got that. Kiran, wanted to take up the textile space with you since you were talking about Raymond and how the entire space is a buzz. VIP clothing today is up 9.5%. Raymond, of course, is 5.5% higher. We also have stocks like Mohit Industries, Monte Carlo that have been on the buzz, Zodiac Clothing, all of those stocks that are a buzz. How are you looking at the trends that are developing, and is there a momentum play here that investors can continue to chase?
So technically, yes, definitely we are looking. There are some of these stock price from the textile sector. One is, as you mentioned, about the VIP clothing, but we liking different stock like Century Textile. If you look at the Century Textile, stock price is taking a support of 200 days moving average, and momentum indicator is also placed with the bullish divergence. So there are very good chances Century Textile can give us a very good return from current market price. It is trading somewhere around 2300. One can go long with at 2300. Keep very strict stop loss of 2280, which is just below 200 days moving average. And if everything, if the stock price is holding 2280, then there are very good chances we can expect some price target of 2400 in short time. Another stock which we are liking is Arvind Limited. If you look at the Arvind Limited, it is into the historically height of high bottom pattern, trading with the support of its rising trend line also. Recently, consolidation resistance was 385, and the stock price is trading above 385 since last 2 days. So Arvind Limited is also at very good level. You can go long. Low risk reward ratio trade is available. Keep very strict stop loss of 360, and we can expect price target of 440, 450 in upcoming 3 to 4 months.
Got that. Well, Mayuresh, just last word from you before we let you go on, how should one be really looking at adding fresh positions right ahead of the budget from now until the budget? What should be the key strategy on the portfolio that is existing and on fresh positions that one should be taking?
So I think our strategy has been very clear, Sakshi. I think we do a pyramiding approach, which means that the sectors that I spoke about and the leadership stocks thereof, you take 1/3 of the positions right now if you are not invested. Wait out how the budget announcements happen. If the stock and the price action is good enough, if the earnings as numbers will also start trickling are good enough, add a few more to your positions as well. And that's the best way to profit these trading factors.
Okay, got that. Well, thank you so much, Mayuresh, then for sparing your time for us and being with us on this very special edition. We'll continue to track all the stocks that you've mentioned to us going forward from here, and hope to have you very soon back on Business Today television and on Market Today. Hope you have a great time until then. Let's continue to track some more moves within the market space with Kiran then. ONGC now has taken the top spot on the Nifty right now. Kiranji, oil and gas space, energy space, and within that the upstream ONGC. How are you looking at the entire pack?
So looking at ONGC, yesterday we have seen a very furious move, and today the stock price is also continuing that particular move. So definitely one can go long on ONGC at current market price, considering the daily price chart. The momentum indicator is also getting back into the bullish zone. The overall stop loss, which is going to be a cluster support of its short-term moving averages. So yeah, the stop loss would be 270, and if 270 is hold, then we can expect a good amount of upside should be there. The 300 would be the cluster resistance. Once the 300 is also crossed, we can see some firework should happen on ONGC. So definitely one can go long at current market price with this stop loss of 270.
Okay, got that. So that's ONGC for you. Let's again look at one more space. Remember, yesterday we were talking about the insurance pack, viewers. Today, some of the stocks are again buzzing sharply. Let's look at New India Assurance Company. A very smart move is coming on that one in trade today. New India Assurance. LIC is also a buzz. Remember, yesterday it was a buzz. Today it's 0.8% higher. We'll look at that too. But let's look at New India Assurance, GIC Ray, and yes, a 6% move on this one. Let's also look at the GIC Ray and reinsurance. Yes, that's a 3.5% up move. And HDFC Life and SBI Life, I think, are also a buzz with some action that's coming back in the fore. Anything within the insurance basket that looks positive to you, Kiranji?
So on insurance sector, LIC is our preferred pick, honestly speaking. Reason being, after announcing IPO, the stock price first time trading into the height of high bottom pattern. Recently, we have seen LIC insurance made a high of 1200 rupees, and from that level, it is into the consolidation base. Now, stock price is taking support of 20, 50, and 100 days moving average, and again starting height of high bottom pattern. And as the budget is announced, generally every time we are expecting logistic company, insurance companies expecting some good amount, good news from the budget. And for that reason, before budget, we are seeing that insurance company getting back into the bull run. So as of now, the LIC is giving a breakout from its ascending triangle pattern. So definitely LIC insurance will be the good buy at current market price. Keeps the stop loss below 980, and we are expecting price target of 1100 in very short time. So LIC insurance is our preferred pick from the insurance sector. Another sector another stock which we are liking is SBI Life. If you also check SBI Life, the price has made inverted head and shoulder pattern. Breakout was at 1470, and from that level it is trading at 1520. 1520 is the previous resistance. Once the stock price crosses above 1520, we can expect a price target of 1600. So definitely SBI insurance, SBI Life is also a very good spot. At current market price can go long, keep strict stop loss below 15.
Okay, got that. So pharma space, oil and gas, that's a buzz with action. Broader markets, especially small caps, is a buzz in action. And apart from this, it's the PSU stocks that are doing very well. 0.7% of an uptake for the Nifty PSE index, and BEL is taking it away now. 2.3% higher in trade. BHEL 1.4% higher. NTPC up 1%. HAL up 1.5% in trade. You again have REC that's buzzing 0.7% higher. Concor that's also up and about in trade. Let's also look at BEML. Viewers, we've been discussing this stock and now it's shot up. I think about 12.5% right now. It's at the day's high move, and we will look at how this stock is poised to move forward from here. Power Grid, NHPC, you have Steel Authority. All of these stocks are buzzing within the PSU space as well. Another very strong move that is coming back into the PSU stocks. BEML first for you, Kiranji, we discussed this, it's shot up to 12%, and BEL, which is now taking some action and now is among the top movers within the FNO space as well.
So as discussed, BEML is already fired. Now discussing about the BEL is just crossing the high of the day made on the election poll, exit poll. I mean, On exit poll day, we have seen the BEL made a high of the 323, and now stock price is sustaining above those levels. So if prices keep sustaining above those levels, we can expect another firework should happen on this particular stock. So as of now, one can go long on BEL at current market price. Keep very strict stop loss of 310. If 323 is held, then we can expect some price target of 340, 350 in very short time. So definitely one can go long on BEL at current market price.
Okay, got that. Well, thank you so much, Kiran, for being with us on this special edition and helping us to chart out various strategies on the markets. Still a century down as far as the Nifty is concerned, 24,200. As far as the levels on the Nifty is concerned, the Nifty Bank is now drifting even lower, 720 points lower now. A 1.4% downtick can be seen, and it is HDFC Bank that is the top drag right now, 3.8% down at 1661. We also have M&M, Titan, Tata Steel, IndusInd Bank, ICICI Bank as the other top drags in trade today on the Nifty. But what is keeping the losses in check? Reliance Industries, 0.5% higher, 31.25 right now. Then you also have pharma space stocks that are pulling up, stocks like Cipla, Divis Laboratories are up and about. L&T is also rallying, 1% higher for L&T today among the heavyweight counters. Then you also have stocks like ONGC that's buzzing. And within the PSU pack, again, it's BEL, BEML, HAL that's again springing back into action, HEL, NTPC. These are the stocks, and railway counters are also doing well. Insurance is doing well. Within the defense pack, when we are talking, Cochin Shipyard is flying away. There is no let up. Remember, it was Mazicon that shot up to 20% uptake. Cochin was up 10%. It's again up 7% higher in trade today. 28.57 for Cochin Shipyard as well. But overall, half of the markets in terms of sectoral action has slipped into the red. Pharma, oil and gas, infra, small cap, mid cap, IT and FMCG, they remain as the top gainers as of now. Within the F&O space, Glenmark, Bharat Electronics, ONGC, Astral Limited, Torrent Pharma and Zydus Life remain as the top buzzers at this point in time. We'll continue to track. The markets are right now 120 points lower at 24,187. We'll continue to track the markets for you viewers. After a long haul, it is a down day. Will we see a bounce back coming in the second half of trading action? Or will Friday be ending on a dull note after a series of record high close that we've been seeing on the markets? We'll continue to see and track the markets for you. So stay with us on Business Today Television. A lot of action to get unfolded. In case you have questions on the stocks as to what should you be doing on this down day after those series of 5 weeks of up move that you've tracked on the markets thus far, you can dial into us. WhatsApp numbers will be flashing all across our channel. At 12 noon, daily calls will be I'll be back, and you can see top market experts addressing all your queries. So joining at 12 noon.
Like in Lok Sabha, the Prime Minister's Rajya Sabha address had the opposition up in the arms as India Bloc MPs stage a